Hi students, today we are discussing a problem related to retirement of a partner. Here is the question. You can write down this question by pausing the video and can see how each adjustments are taken while solving the question. Here three partners A, B and C sharing profits and losses in the ratio of 5:3:2. Their balance sheet on 1st April 2019 given here consists of liabilities, then assets, and employees provident fund is there, reserve fund and workmen's compensation reserve also is there, and on the asset side existing goodwill is there. And on the above date, that is 1st April 2019, C retires from the business. At the time of his retirement, following adjustments are given. Goodwill is to be valued at 2 years purchase of the average profit of last 4 years. Profit for the last 4 years ending 31st March were 2016 14,400, 2017 20,000, 2018 there was a loss of 10,000, and for 2019 15,600. 5% of provision for doubtful debts is to be made on the debtors, that is debtors is decreasing. Stock be appreciated by 10%, there is an increase of stock by 10%. Patents valueless, completely its value has to be written off. Then building be appreciated by 20%, increase in building by 20%. Sundry creditors to be paid 2,000 more than the book value. Sundry creditors is increasing by 2,000 rupees. Here you have to prepare a journal, then revaluation account, capital accounts of partners, and the balance sheet of the new firm after the retirement of C. So we will draw a journal here and leave it as it is, so that we can prepare the ledger accounts first, and after the preparation of ledger account we can post the journal entries here. Okay, then first we can see how to prepare the revaluation account. Preparation of revaluation account is same that of admission of a partner. There what we have done in the same way we can do here also. Okay, so in the question it says that 5% provision for doubtful debts is to be made on debtors. So debtors is decreasing by 5%. So you can write on the debit side provision for doubtful debts 5% of debtors. Debtors we have 8,000. So its 10% is 4,000. Sorry, 800, and 5% is 400. Then it gives that stock appreciated. Stock, there was an increase of stock. Stock appreciated by 10%. The value of stock is 40,000. So its 10% increase was there. That means 4,000 increase. Then next it says that patents be valueless. Patents is getting decreased by 2 patents. Full amount is decreased, 4,000 can be written on the debit side of the revaluation account. Then says building appreciated by 20%. Building 60,000 was there, so it's 20% increase. That means 12,000 is the increase that can be written on the credit side by building. Okay. Then sundry creditors be paid rupees 200 more than the book value. Sundry creditors increase. There is an increase of sundry creditors. That means liability increasing. So it should be debited sundry creditors 2,000 rupees. Okay. So all the adjustment entries are over. Okay. Now we will total the revaluation account. 16,000 credit side it is more. 16,000 is written and transferred to the debit side, and has written here the balance 9,600, and that will be credited to the partners capital because it is profit. So to partners capital for A, half of that amount, that means 4,800, and for B 2,880, and for C 1,920. Is it clear? So this is the revaluation profit. Now let us prepare the capital accounts of A, B and C. Capital account of A, B and C. Particulars amount is filled. Okay, we can write first the opening balance by balance brought down. Opening balance is given in the balance sheet 50,000, 35,000 and 25,000. So that is written here. Then in revaluation in balance sheet there is reserve fund. Reserve fund is to be shared among the partners, so we can write by reserve fund. Reserve fund we had 6,000. It will be shared among partners in their old profit sharing ratio. So 3,000, 1,800 and 1,200. The ratio was 5:3:2. Okay. Then another one, workmen's compensation fund. So there was no liability for workmen's compensation, so the full amount can be credited to the partners capital account. Okay, so 2,000, the full amount is transferred there. Then in balance sheet there was goodwill, existing goodwill was there, that is to be written off, so it can be debited to the partners capital account as to goodwill. 6,000 was there, it will be credited to partners capital in their old ratio. Okay, now so that much is there. Then revaluation profit is there, that is to be credited, so we can write by revaluation account. We have got the balance as 4,800, 2,880, 1,920, that is transferred here. Okay, now for C is retiring. For him we have to pay the goodwill, that will be given by the gaining partners. So since the new ratio is not given, old partners we have to assume that old partners, that is A and B, old partners including C, but after the retirement of C, the remaining partners A and B will share the profit of C in their old ratio itself, that is 5:3. So we have to find out the goodwill first. We can write the calculation of goodwill here. Calculation of goodwill. So profit for the last 4 years is given. We can find out the total profit. Total profit is 14,400 plus 20,000 plus 15,600 minus 10,000. Minus 10,000 is for loss. So total profit 40,000. Then average profit 40,000 divided by 4, because it is for 4 years. We will get the goodwill 10,000 into 2 years purchase price. So 20,000 is the total goodwill of the firm. Then C's share of goodwill is 20,000 into 2 by 10, 4,000. Okay, so that 4,000 will be paid to C. It will be paid to C by whom? By A and B. So in C's capital we can write by A's capital and by B's capital. In C's column the goodwill will be shared and written in the gaining ratio, that is 5:3. Okay, then that will be shown in the debit side of A's capital and B's capital, as will be written here C's capital. That means A's capital debtor, B's capital debtor to C's capital. The amount will be shown here, 2,500 and 1,500. Okay, then here in the question it is given that C is retiring and C's amount is to be given to him. Okay, but here you can see that C's amount of total capital balance we have to find out first. We have total capital for C 32,500 minus 1,200, that means share of goodwill. So remaining how much is there? 31,320. So this is the balance for C that we have to pay to him. So normally we have studied that payment of the retiring partner or the amount due to the retiring partner can be given in two ways. Either by paying cash immediately or by transferring that amount into his loan account. See here in this question, in this particular question, nothing is mentioned regarding the payment of retiring partner's capital balance. So what to do now? That is an important thing here. See, can we check that whether we can pay the amount in cash? Is it possible here? See how much cash balance we have. We have in the opening balance sheet 2000 rupees cash with us. So with that 2000 rupees, is it possible to pay off him entirely full amount? Yes, it is not possible. So instead of paying him in cash, it should be transferred to his loan account. So we have to write here to cease loan account. Why it is taken to cease loan account? Because it is not able to pay it fully. But instead of that, in the question, if it was given that the available cash should be paid first, that means 2000 should be paid and the remaining is transferred to loan account, then we can do like that. Okay, on the other hand, here in this question nothing is mentioned regarding the payment and we had no cash more than this amount, so we are unable to pay him in cash. Since it is unable to pay in cash, it is transferred to his loan account. Okay, then what about the remaining partner's capital? We have to close that and that will be transferred to the debit side and will write the balance. What to do with that balance? It will be maintained as the closing capital of the remaining partners. Is it clear? Now let us prepare the balance sheet, and before preparing the balance sheet we can do one thing. These journal entries, this entry can be entered in the journal. So we can write the journal here. Journal entries, date, particulars, debit amount, credit amount. First, the journal date can be given 2019 April 1. Okay, revaluation journal entries can be written. Revaluation journal entry, we have provision for doubtful debts, patent and sundry creditors on the debit side of revaluation account, that we can write here. Revaluation account debtor to provision for doubtful debts to patents to sundry creditors. That means first two are decrease in asset and the next third one is increase in liability. So the amount can be mentioned here. 6,400 revaluation total. Provision for doubtful debts we have 400. Then patents 4,000. Then sundry creditors 2,000. Okay. The next journal entry, on the credit side of revaluation account we have stock and building. So we can write that first. Stock debtor, stock account debtor, then building account debtor, building account also written, then to revaluation account. Okay, so building we have 4,000, then stock 4,000, building 12,000 and total amount 16,000. Okay, now after entering all these things we have got profit on revaluation, that also will be taken here. Revaluation account debtor to A's capital to B's capital to C's capital. That profit, sharing of profit entry is to be written. So 9,600 was the total amount of profit shared in 5:3:2 ratio. So 4,800, 2,880 and 1,920. Narration also can be written. Okay. Now on the same date we have to write the journal entry regarding See, we have to write the journal entry regarding the adjustment of goodwill for the retiring partner. So A's capital debtor, B's capital debtor to C's capital. That means 3000 and here 1800 and 4000. Sorry, 1200 goodwill. So the existing goodwill is shared among the partners. The journal narration is written being the old goodwill is written off among the partners. Okay. Then now the next one is from the balance sheet we have to transfer reserve. So reserve debtor to old partners capital, to A's capital, to B's capital, to C's capital. General reserve we have total 6000 and shared among the partners in their old profit sharing ratio. And narration is written here being the transfer of general reserve to old partners capital in their profit sharing ratio. Like that we have workmen's compensation fund. So workmen's compensation fund debtor or workmen's compensation reserve debtor 2000 to all the partners capital A, B and C. It is transferred. Okay. Journal entry being workmen's compensation reserve shared among the partners in their old ratio. This also we have to write the dates. Date is there here. Next we have adjustment of C's goodwill. C has to be paid off with his share of goodwill. That will be compensated by A and B in their gaining share. So that is written A's capital debtor, B's capital debtor to C's capital. $4,000 is shared, and then narration also mentioned here. Okay. Now only one entry is left regarding the payment of C's amount. It is not paying immediately, instead it is transferred to his loan account. So C's capital account debtor to C's loan being the balance of C's capital account transferred to his loan account. So that also we can write here. Okay. Now the journal is completed. Is it clear? Now the last part, what it is, balance sheet is left. We have to see how to prepare the balance sheet. Balance sheet as on 1st April 2019 with the liability amount, assets amount. We can write the assets one by one. Cash we have 2000 rupees, no change. Then we have sundry debtors. Sundry debtors we have 8000 rupees. 8000 is there. Less provision for doubtful debts 400. So outer column 7600. Then next stock. Stock there was stock was an appreciation of 10%. That is written. So now it became 44,000. Then furniture. Furniture we have written here 13,000. Then we have building amounted to rupees 72,000. So building is written. Now let us see on the liability side. Liability side we have first item sundry creditors. Sundry creditors is written amount 12,000. Okay, then after that we have C's loan. 31,320 is written. Then next, employees provident fund. It was an outside liability, so we cannot share that among the partners. So it should be shown as it is. Then capital account balance of the remaining two partners are written, A and B. That is shown here, 53,300 and 36,980. Now let us see the total of balance sheet, 1,38,600 for both the sides. Okay, so that is the end of the solution. You can try to solve this question once again and can solve the similar type of questions. Thank you.